Walk us through your downgrade and why.
Yeah, thanks, Morgan, for having me. For us, we've been defenders of FedEx and shares for as long as I can remember. And yesterday was a real thesis changer from our part. On one side, like you said, the guidance that the company gave was about 20% below the consensus, so that was obviously concerning. But more critical and more structural, in our opinion, is the lack of realization by the company management to basically address the fact that a lot of the issues FedEx is facing today is a reflection of management misexecution over the last several years. And so we think until the management team realizes that, is less defensive about their performance, only then can they start righting the ship. And that's really what structurally caused us to move to the sidelines and downgrade our rating.
That really gets at a key question on the heels of these earnings, Amit, and that is how much of the headwinds, how much of the challenges we're seeing at FedEx are really a symptom of the global economic backdrop and all of the slowing in trade headwinds that we've been seeing, and how much of them are company-specific?
We think the majority is company-specific. The company made an acquisition, as you know very well, TNT Express, that was hit by a cyber attack, and TNT, we believe, is impaired in its value as a result of that attack. To be fair, in the domestic side of the business, e-commerce continues to grow. The problem with that is that brings on density challenges and capital investments that drive free cash flow much lower. So I would say the majority is company specific. And of course, FedEx is not immune to what's happening in industrial production, what's happening to global trade. And you can see that in some of the statistics with respect to their international priority volumes that are flattening out. The yield in international priority, which is a very high profitable segment for them, is actually down year over year for the last couple quarters. So clearly, I don't want to say it's 100% company specific, but I do think, and we do think here at Deutsche Bank, that the majority of it is company specific.
When you criticize management and some of the misses on execution over the last year and a half or so, are you calling for changes within the C-suite?
Certainly we've seen a lot of management turnover at FedEx, specifically in their international business. So I think some of that's going on. I think what we are calling for is a more rigorous assessment of the return profile of the business and a more rigorous assessment of the returns on invested capital, given CapEx as a percentage of sales is still very high. This is a $40 billion market cap company that is barely free cash flow positive. So when people look at the stock being down 12, 13% today to $150 and say it's a buying opportunity, we would caution, FedEx today trades at a less than a fraction of a free cash flow yield. It's actually quite expensive when you look at it from that lens.
Well, I'm curious listening to you. I mean, what changed here? You were positive for a long time. And when I say that, I don't mean this quarter. I mean over time here in terms of some of the metrics you just shared. Did something change in terms of the way they do their business, or is it simply execution on the part of management?
Yeah, it's a fair question. I mean, we've been positive. When prior to the tax reform, the stock was at 180, went to 290. The TNT acquisition, TNT was a $7 billion revenue company doing a 4% operating margin. And the hope was as they integrate TNT in Europe, that 4% operating margin could get to 10% through synergies. And obviously a 6 percentage point uplift on a $7 billion revenue base translates to a lot of incremental earnings and equity value. Unfortunately, this is not their fault, but it was hit by a cyber attack. That is not their fault. But unfortunately, the reality is that as a result of that cyber attack, stronger players in Europe, namely UPS and Deutsche Post DHL, were able to take significant market share. So it's going to be very difficult, in our opinion, for FedEx to, fix the issues at TNT, given, the fact that they haven't integrated markets like Germany, France, and the UK more than 2 years after the acquisition. They haven't finished the integration of those countries.